Welcome to Barchart series of educational webinars designed to enlighten you about a variety of trading ideas and concepts. Today's session, my three favorite technical indicators. Today I'm going to share with you my favorite indicators, and each of these uniquely different indicators serves a purpose to a larger plan and together creates actionable and confident trade setups. Who am I? Well, hello everyone. My name is John Rowland, Barchart's head of trading education. And though there are hundreds of indicators one can use and millions of combinations blending them together, I found that just three can help me define price range probability, determining trends, momentum, reversals, and confirm actionable setups. Now, market conditions can change, and some indicators may be better suited for a very specific situation. However, I've found over my 35 years of trading that these three straightforward indicators are consistent, reliable, and most importantly, profitable. So stick around as I reveal my three favorite indicators, and then I explain the reasons why I choose them and demonstrate the process linking them together to create a low risk, high probability, potentially high rewarding trades. Now, before we get to all of that, to help me with today's session is our moderator and Barchart's project director, Gene Baker. Hello, Gene.
Happy Wednesday, John. How are you?
Happy hump day.
Yeah, sure is. How are you doing?
Well, now you and I know it's a hump day. We're just trying to get through the week this week, right?
We'll try. Yeah,
We'll try.
absolutely.
All right, you ready to get started, Gene?
Yes, let's get going.
Just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or hold or trade securities, commodities, or any other investment involves risk and best made on the advice of a qualified financial advisor. And that the system that I'm going to show you, past performance is no guarantee of future results, and under no circumstances shall we be liable for any loss or damages that you or anyone incurs as a result of your trading or investment activity that you or anyone else engages in based on the information or material that you receive through barchart.com and or our services. Okay, so what are my three favorite indicators? Well, first, Bollinger Bands, which are going to determine a range of probability, and they're going to help classify areas where actionable setups may, let me say that again, may develop. I'm going to use moving average convergence divergence, MACD is commonly referred to. And this is a versatile indicator that not only measures momentum, but it also will alert me of price and trend changes, as well as confirming established trends. And volume, which I believe is a forgotten and often overlooked indicator, but this simple indicator that not only validates price movement, but can foreshadow dramatic moves and can indicate tops and bottoms. So wouldn't it be nice if we had an indicator or a tool that tells us that prices are overextended or gives us permission to join a newly established trend? Well, Bollinger Bands, we're going to look at this in a moment. Bollinger Bands allow us to do that. They precisely what they're defined to do. So you can see here there's red and blue arrows. The red arrows are telling us where price has gotten too far or gotten extended, and then there's a probability that price is going to move back in the opposite directions. The blue arrows represents where price has engaged. What we're going to discover is called the mean, and it either acts as a level of support or resistance, or it can indicate to us that there's a change in that probability as we're going to move from one quadrant or section of our Bollinger Band range to another as we ride this new established trend. So Bollinger Bands, if you're not familiar with them, so let's just kind of go through a little bit of a base information here. It measures price volatility, but more importantly, in my process, it's going to tell me the probability of a range of price where price is likely to trade. And when price reaches these low probability areas, when we find those extensions, then this is where this becomes a high probability or a potentially high probability trade. Low probability occurrence, high probability trade. Now, the default for Bollinger Bands is created using two bands around a moving average. Now, the outer bands represent a 2 standard deviation from the mean, and the statistics behind that tells us that approximately 95% of all price action will fall inside of 2 standard deviations. This is that basis of locating these high probability zones of action. Now, Bollinger Bands can be applied in all time frames, but my experience and these zones of actions that we're going to discover are determined by a confluence of our daily and weekly Bollinger Bands and Bollinger Band widths. So how are we going to apply this? Well, what are the applications? In other words, how are we going to use Bollinger Bands to help us find trading opportunities? So the first thing we're going to look at is the band width. So if the bandwidth is narrow, this is a sign of low volatility and price consolidation. Now, the expectation is that volatility will expand, and we can use this ideal of expanding volatility as waiting for price to move from our mean to our outer band. And now this can use this to confirm a breakout in many of our trend following strategies. When bands are wide, when bandwidths are wide, this is a sign of high volatility and that price is accelerating. Now, the expectation is that price will eventually revert back to the mean, what sometimes is referred to as a mean reversion strategies. So we're going to blend these two concepts together, trend following and mean reversion. And what we're going to discover is that Bollinger Bands of higher time frames with those of lower time frames can aid us in better timing entries and also exits. Again, blending both of these two strategies together. So let's do this. Let's go to a market and just pick Apple because I know folks like that one. I'm going to go to a chart. And what I'm going to do here is, well, first let's do this. Let's clear all this away right now. And then I'm going to blow this out. And again, I started from scratch. Let's start from scratch. Let's go to a candlestick chart. Okay. So what are we going to do? We're going to look at Bollinger Bands. So let's do that. So how do we find Bollinger Bands? So you go into studies here, and I just can scroll down. I can either type it in, I can just write Bollinger Bands, or I can scroll it down. It's right here. So I'm just going to scroll it down. Now, what are the defaults for Bollinger Bands? So the default for Bollinger Bands is 20 period. In other words, if I'm looking at a daily chart, I'm looking at a 20-day moving average when we create this mean and the standard deviation. If I'm looking at a weekly chart, then it's 20 weeks. If I'm looking at a 60-minute chart, then it's 20 60-minute periods. The width is our standard deviation. Again, you can modify this if you want to use a lower period or you want to change your standard deviation width. Now, what I've done is in my Bollinger Bands, I've done a little bit of manipulations or changing some of the defaults. And the defaults that I do change is the colors. And so my outer band is going to be red and my lower outer band is going to be green. Now, the reason why I do that is that typically what I'll find is that the upper band is going to be a selling opportunity, that therefore the red, and then the lower band is probably going to be a buying opportunity, therefore the green. Now, that is not always the condition. It's just the reason why I do that. And then we have what is called the fill or the ribbon. And so it will create a shaded area. And this is that range of price probability that I'm going to design my trades around. Now, the blue shaded areas really represents this 2 standard deviations above and below our mean. Now, more importantly, with a high degree of confidence, that approximately 95% probability that price will fall inside of this range. In other words, it's kind of guiding me where price should be. Now, remember when you went to Disney and there was that car ride where you could steer the car and you could give it gas, but there was these bumpers that kind of guided you around the track. And if you ran too hard into the track in one direction, the bumper would bounce you back in towards the middle of the track, or maybe you'd ram into the opposite side of the track. So I want you to think about Bollinger Bands in that way, guiding us around and telling us where the outside of these tracks or this boundary, and then bouncing us back inside of that range. So in times when the market is trending, what we'll typically notice is that the price will bounce back and forth between our mean, which is represented here by this brown line, and our outer band. So you can see it here on this uptrend, and you can see it here on this downtrend. Now, when bandwidths are wide, there's more room on the track, right? There's more room for price to travel. Volatility. So again, notice, where our bands are wider, right? There's a lot more price movement. When our bands are wider, there's a lot more price movement. When our bands are wider, there's a lot more room for price movement. Now, narrow bands alert us that the market is gathering energy, and we're waiting for a breakout and starting a new trend or new trending. So you can kind of see that here, right? Narrow bands, the market is gathering energy, and then we break out, right, and create this new trend. Again, you could kind of see where bands here were coming in, they were condensing, and then we got this breakout that started this new trend. Now, recently, we'll look at this, we're looking at Apple here, our bands are narrowing. So market is kind of telling us that something is about to happen, and based on our Bollinger Bands. But again, notice here, even though we had a trending market, our bandwidth got narrow, and that was an indication that something dramatic was about to happen. In this case, was a reversal of our price action. So in sideways markets, where our mean is kind of just traveling horizontally, we'll typically see that price will bounce back and forth between our bands. Now, the mean itself can confirm our trend. Again, remember, this is a 20 period. But when it turns positive, it is confirming that we have an uptrend. And when it turns negative, it's confirming to us that we have a downtrend. It is a lagging indicator, but it confirms our trend. But it also acts as a level of support and resistance to our trends, as we can see in the example here and the example here. But it also is a catalyst, and it will accelerate price from band to band as price crosses our mean. So again, here you can kind of see where price crosses our mean and then price accelerates away. Here we can see where price crosses the mean and then accelerates away. Here, we tested the mean a couple times, but it was not until price closed above the mean that it accelerated price away. So it can also be a catalyst that excels price from, let's say, one band to another. So what is my process in terms of how we're going to use Bollinger Bands? So what I'll do is I'll start at my highest time frame. And again, I told you that I like looking at weekly Bollinger Bands. And so from here, what I'm going to do is I'm going to draw 3 lines. And what I'm going to do is I'm just going to identify at this higher time frame outer and lower bands. And so let's do this. One thing I can do is I can just right click on this and clone a band, right? And clone a line, or I just can come back here and click on draw a horizontal line and draw that. So that's what I've done here, as I've drawn 3 lines on our outer bands and on our means. Now, the next thing I'm going to do is I'm going to look at what our mean is doing. What is this brown line doing? In other words, I'm going to identify my trend. Now, we have been trending upwards here in Apple, but as of recent, we have kind of a sideways price action. Now, I'll also take notes of where is price in relation to our means and our outer bands. And what we can see here on the weekly chart is that, think about that Disney, right? That Disney, right? We're kind of bouncing between the middle of the road or middle of the track and our lower band. Now, typically that would be an indication of a slightly bearish price action. But, if we bounce off the outer band, that could also be an indication that we could revert back to the mean. But right now, we're kind of just in the middle of the lower range of our Bollinger Bands. So then what we'll do is we'll move down to our lower time frame, in this case, our daily, and we'll repeat the process. Now, just sort of to help me in demonstration, I don't want to have a lot of lines here. There's a higher probability that we're not going to get to the upper band of our weekly in Apple, because what we've just saw it on the weekly, we were in the lower half or that lower quadrant. So what I'm going to do is I'm just going to borrow this line for a second. I'm just going to move this to my mean and my daily. And then what we could do is draw, again, another horizontal line on our lower band. Now, notice what happens here is that I didn't touch this line. This was our mean. Again, let's go back to our weekly. That was our mean of our weekly time frame. And then now at our daily time frame, it's our outer band. So here is a high probability setup opportunity if price came back to this band. Now, the setup probably would be a selling opportunity, but the probability of us getting there today or over the next few days, it's probably low. But the fact of the matter is, what we're trying to discover is where we see this confluence of our bands and our means as we move from our higher time frame to our intermediate, in this case, our trend time frame, or our daily time frame. So again, what is our trend? Well, we had been in an uptrend, but kind of feels like the market is in a kind of a sideways to maybe lower price movement. But again, our mean is still horizontal. That is telling us sideways. And what is our Bollinger Bands doing? Well, they are contracting, which is telling us that, maybe something is about to happen. Now, what we do see is that our weekly and our dailies are separated a little bit. So what it might mean is that we could see price fall here, but maybe we might fall outside of our bands initially. until it found that weekly band that before it reverts back to the mean. Or what we could be seeing here is the market is starting to gather energy and then might break out of our bands. Now, in this case, it's difficult to tell. We'll wait. We'll look at other analysis to help us with that determination. So let's add another layer to our analysis. And that layer we're going to do is add moving average, convergence, divergence. So again, as our application or how we're going to use this in our process, so the MACD is this oscillator that is a momentum indicator, which is also very beneficial for us in confirming upcoming price actions or confirming our trends. Now, there is a buy and sell signal that MACDs create, and these are called crossover signals. Now, this occurs when the MACD line crosses the signal line, and this is an indication of a possible trend change. And also, we can look at MACDs in terms of something called divergence. There are negative divergence and positive divergence. I'm going to show you a couple of examples of that. But these divergence ability of the indicator signal gives this enhancement. It gives us this greater confidence of what we're seeing in our price action and what we're recognizing in our price and trend changes. So for demonstration purposes, just so I can get through this a lot quicker, is I've already created a snapshot, and this is of gold, and we'll go back to gold in a second. What we're looking at here is our MACD crossover signals, but let's go through all the components of our MACD. So first of all, we have two lines. One represents our fast moving average and one represents our slow moving average. And the buy signals or sell signals occur when the fast crosses the slow, as we see right here. Here you see the fast crosses the slow from below. That is a buy signal. Here would be a sell signal. Here would be a buy signal. Here would be a sell signal. And here would be a buy signal. Now, there was another component of the MACD, which is called our histogram. Now, the histogram is just a charting representation of the difference between our fast and slow moving average. Now, this is an average of an average, but what we can look at this is telling us the momentum of our market. In other words, as the histogram goes down brown or below what is called the zero line, that is telling us we have negative momentum. Here we have positive momentum. So the histogram can tell us what is the momentum of current price action. Now, another feature that MACDs do, and this is really kind of one of the reasons why I use it, is when our fast line crosses this zero line, you can see across here, that is a confirmation of our trend. Again, lagging, but confirmational. So when it moves from above to below, that is confirming that we're in a downtrend. When it goes from below to above, that is confirming to us that we're in an uptrend. And even though price might move in a bullish formation or momentum, if we have our signal, our MACD line is still below, even though the momentum is positive, this is still telling us we still have a downtrend. Now here it reversed and then it reversed back again. So using the MACD to help us identify momentum, buy and sell signals, but also confirming our the trend. Now, some people might ask me, so like, why do you use MACDs and not, let's say, stochastics or RSIs, which are also momentum indicators as well? Now, there's a couple of reasons. One is I like the lagging effect that MACD is. It's more confirmational to me. All right, I'm more willing to become late to the party. I just want to make sure the party is rip roaring when I get there. I don't want to be the first to the party, which I think a lot of times RSIs and stochastics do that, right? They kind of, we can get into an overbought or an oversold condition where the market will stay that way for a long period of time. The other thing is I tend to think that those two indicators that I just mentioned give a lot of false signals as well. Again, the lagging effect of the MACD tends to be more confirmational, and I think just give better signals. Now, let's go back to our blowout here. And so let's move away from Apple and let's go to gold. And so again, if you're not familiar where to find the studies, you could just type in MACD here, or you can scroll down and there is where it says MACD oscillator exponential. That's the one that we're going to demonstrate upon. So let's go to our gold here, and let's go back to our Bollinger Band process. Wait, let's start at a weekly level. And again, here's my outer band. Here's my median, right? My mean, excuse me, whoops. And here is my lower band. So again, what do we see in terms of our Bollinger Bands is that price has gone from the lower band through the mean, and now we are moving towards the outer band. So this is Bollinger Band probability is telling us there's a higher probability that we're going to go up to the outer band, right? Think about our Disney, right? We've gone from one side, now we've gone through the middle, and now we're going to go back to the other side. So there's a higher probability that we're going to go out to the outer band, or in this case, price is going to continue to move higher. Now, what do we see from our MACDs? Well, in just recent, right, we've had a lot of negative momentum, right, a kind of sideways price action, but we are now back above the zero line. So that is confirming to us that the price action that we're seeing is demonstrating a uptrend. Now, what we are also seeing here at the weekly is that our MACD is crossing, right? Here's our MACD line is crossing our signal line. Again, a buy signal. Most times we will see that buy signal when we're in, a negative price momentum, or that we're below the zero line, as we see here. But here we're getting at a positive buy signal where we're also confirming an uptrend. That's a really good sign, by the way. So if I go to, our 6 month or daily time frame, there's that more classical buy signal where we get that crossover, right? But notice what we're recognizing here is this crossover buy signal where we've had a down sloping trend, right, is in concert with our price breaking or moving through our mean. And we said that we can use the mean as support and resistance typically, but also can give us a confirmation of a catalyst of the price action that we're seeing. And that's exactly what we got, this big surge in price as we went through our mean. Now, what we see, our MACD line is above our zero line, and that is confirming to us right here that we're now in an uptrend. What are our Bollinger Bands doing at our daily time frame? Well, we've come from a cycle of contraction, and now we're moving into a cycle of expansion, which is again a more positive sign, volatility, that price has more room to run, and more room to run in this case to this outer band. Now, which is really interesting today for gold is that our outer band on our daily is also our outer band on our weekly. So in terms of a probability event, we're probably a high probability we're going to test this outer band, but there might be a selling opportunity if the conditions are correct, or this could also be an indication of us as we move higher that we might be breaking out of a range. Now notice our momentum is very strong here, so there's probably the probability is that we're going to go to the test the outer band, but we'll have to wait for the proper conditions to sell it. Now let's go back in history here, and I kind of want to reiterate what I've just moved through with you. So here's a weekly band, and notice that we're getting, price is coming to the outer band, right? Our Disney ride, where we might think about a mean reversion or a change in trend, right, on the outer band, especially after the bands had narrow and now had wide, and after we've been in what looks like a nice downtrend. So what I'm going to do is I'm going to borrow these lines from did for the current analysis, and what I'm going to do is I'm going to go off of this one candle here that was outside the band, and I'm just going to draw my mean, my outer bands at the time of this candle. And so there we have our lower portion right here. It looks like it's a little higher there. There's our lower portion, there's our mean, and then there's our outer band. Notice that here you got our MACD is confirming to us, giving us a buy signal, right? Where is it giving us a buy signal? Well, it's giving us a buy signal, again, what we just saw in current price, as our price action is breaking above our mean. In other words, a trend following breakout signal. So that would be a great signal for us that price probability is going to move from the mean after being at the outer band on the lower outer band to the outer band on the upper band. Now let's break this one down. Let's go down to our daily time frame. Now this is a futures market, so anytime I go in the past and I do some back testing, I want to make sure that I want to look at the contract that was most actively trading at that time, and that's why we will use the daily nearby. But if I'm trading today and I'm looking at price action, I want to look at what we would call the contract specific. But anyways, let's go back to this circle. Again, this was that circle that we discovered on our weekly where we were on the outside of our Bollinger Bands. And again, notice what we're seeing here is that our price action has come to those outer bands. And what are our bands doing? Well, they're contracting, again, signifying to us that something is about to happen. Market is gathering energy. Now, at first thought, if I was trading on this day, I would have thought the market was going to break out to the downside because of our downtrending market. But what do we see in terms of our MACD? Our MACD is telling us a different story. Again, the crossover, the buy signal occurred back here. And now what we're seeing is that we're making relatively same lows, but what we're getting is what is called a divergence, or what in this case is a positive divergence. This is another buy indication. So again, I might still be confused here. I'm not 100% positive what is going to happen. All I just know that price volatility is about to happen. I'm getting a positive divergence after a crossover buy signal. And then here's our confirmation, right there, that we're in an uptrend, right, where our MACD line is up here. Now, notice what is happening from this point here. what is our price action doing? It's holding our mean, right? And confirming this uptrend. Now, it's not until we actually break out of the price area here, right there, where we get that confirmation at the higher time frame. So again, blending of higher time frames and lower time frames, but in this trade, we could have definitely been in this trade a lot earlier than what we would have saw from our confirmation of our weekly time frame. So how do I use all this information now that I'm starting to gather, right? I'm looking at higher time frames, I'm looking at this intermediate time frame. So what are we looking at, and how can I give myself permission to act upon this information that I'm gathering? And that would be our third indicator, which is volume. And again, as I said before to you, that I believe that volume is one of the most underappreciated indicators. And price is just simply the result of volume. Again, how do we create price? Price is the interaction between buyers and sellers. And the more volume, right, that is the truth. It tells us something behind price. So rising volume can confirm that more participants are getting involved, which in turn validates price. Volume is really the fuel of the market, right? We can have low volume events, we can have low volume trends, but low volumes or falling volumes confirm that fewer participants are getting involved, and which in this case would cast a doubt on price. And so complacency is definitely a trend killer. And finally, spikes in volume are warning signs that price is about to move dramatically. Now, it might be a dramatic move in the direction that price is currently moving, but typically big spikes in volume occur at tops and bottoms. And so there's an old floor adage that says that, they don't ring bells at tops and bottoms, but they do bring volume. So we're going to look at volume. So let's go back to our blowout, where we were looking at our gold example. And we're going to add volume. Now, I could come in here and add volume as a study, or I can add volume or a volume average as a study. But under templates here, we go into templates, and I have a lot of templates. I do have my own template, which is Bollinger Bands, MACDs, and volume. And then I'll give you that in our slide for reference material. But under bar chart templates, we have something called the EMAC plus volume. So there it is. Now, here is our EMAC and here's our volume. Now, the only thing that I don't have is my Bollinger Band. So I just come back in my study and I come in here and add my Bollinger Bands. And now we have basically my a system. Now, this is a futures market. And so down here on volume, you will notice that there is this pink line. Now, this pink line represents, as you can see here, for futures contracts, that represents open interest. But if we look at an equity, it will give us a moving average, which is a nice tool to have as well. So let's go back to our case study. And again, I need to go to a nearby. And so what do we see here, right? Here is those two bottoms where we were piercing the outer Bollinger Bands at both our daily and our weeklies. Here is our MACD crossover, right? Again, we're waiting for some kind of confirmation. Remember, our Bollinger Bands were contracting, right? Low volume, right? No conviction. And then, right, what happens? We kind of break out of this range on volume. There's our confirmation. That gives us permission to jump into this trade. Now, again, let's look at this on a weekly basis. Again, right, this consolidation, or this where the bands were narrowing, was on light volume. But then, right, there we go. There's our prices starting to move. We break through the mean on what? Rising volume. So that gives us permission to take that trade. Now let's look what's currently happening, right? Our volume is, it's kind of spiking here on the weekly, right? It's kind of as we're moving through the mean, but let's go to our lower time frame, right? Look at that crossover signal that we got at our lower time frame, our daily time frame, right? There's our crossover, right? As we break through our mean, right? That catalyst, and what is our catalyst that gives us permission to ride this price action as we move from the outer band to the outer band? Well, there we go. There's our spike in volume. And as we continue this trend, as we confirm this trend, what do we see? Rising volume. So it's confirming the price action that we are seeing. If we were going to look for a selling opportunity in this as we get to the outer bands over the next few days or next week or so, well, what will we want to see? We probably want to see a spike in volume and then maybe a drop in volume. Also, at the same time, we would want to wait for that confirming sell signal in our MACD. Do we have that? No. What we have here is confirmation or confluence that we are in an uptrend and our Bollinger Bands are expanding, and we're moving towards the outer bands that are now moving away from us, which is giving us more room to let price run. So, again, I'm not predicting what this is going to happen in gold, but to me, it's very obvious if we can get above, let's say that psychological 2000 level, which we just recently tested on a Bollinger Band piercing, that we're probably going to run to try to test these July highs, which just looks like closer to, 2025 to maybe the 2050 level. Okay, so this is kind of how we blended all that together, using our Bollinger Bands to define the range of price, using our MACDs to give us a buy or sell signal, but then also to confirm our momentum and our trend. And then that last piece of information is that volume. Is volume telling us the story that we're seeing based on the information that I just gathered? Okay, so let's do this. I want to pause here and see if I can read some of your questions, and then we'll move to a current market, and then we'll dissect that current market. Okay, so see a couple of questions here. Let's kind of just work through this for a second, Gene.
Yeah, while John is looking through the questions that have come through, let me just remind everybody that we do have 3 levels of membership for you to use our charts with and to make your own annotations and put trend lines and things like that on. We have a basic membership, which gives you some basic tools. We also have Barchart Plus and Barchart Premier that really open up a vast amount of additional tools for you to use with your charting and with your technical analysis. And we do offer a free 30-day trial. If you haven't already done so, I certainly recommend that you do that.
Thanks, Gene. So there's a question is, what's the difference between Bollinger Bands and Keltner channels? So the difference is Bollinger Bands are based on a standard deviation around a mean. Keltners are a average to range around a mean, how much price could potentially move based on what is called the average true range. So that's the basic difference. What can we do? Brian asks, what can we do to prevent jumping the gun or entering kind of late? So again, Brian, this system is more of a waiting, right? A waiting for the party. And again, I think the last piece of the puzzle of not jumping the gun is waiting for that volume confirmation. But if you can see this confluence of a buy signal in this daily time frame as you go through the mean of your Bollinger Bands, and then you get volume as you cross the mean of your weekly, that what to me would be a great confirmation that would allow me to. Now, am I a little late? Has price already moved? Yeah, again, I will give away some price action to gain greater confidence in the setups that we're looking for. Great question, Brian. What can we do? Let's see. Hang on. Oh, got that one. So Wayne, one of my regulars. Hey, Wayne, how's it going? You know, I think when I answer your question about interpreting this distance or the histogram, in terms of that difference between our fast line and our signal line. Again, it's really just the momentum, right? The momentum of how fast our fast is moving based to this lagging, slower signal line. Again, if my fast line is still below the zero line, I still have a downtrend, but what I'm seeing is that my downtrend momentum is slowing, right? The buy signal is when we cross, right? Now, typically you'll see here that cross, right, as we move to a bullish momentum, right? But we're still technically at this point still in a downtrend. It's just signaling to us that there's been a change in momentum. That change in momentum could become very significant. And again, to Brian's point, here is that change in momentum that is then confirmed by volume, right? As price is breaking through our probability or our range of probability. We've moved from the lower half to the upper half. So there is the signal, there's the price action, the probability price action, and then Brian, there's that confirmation. So Daniel says, can we use Bollinger Bands and Keltners together to confirm a squeeze? Yeah, Daniel, that is definitely what we can do. And again, one of the cool bar chart preset templates we do have something called the TTM squeeze, which does do that. It confirms Keltners and Bollinger Bands. And there is a webinar that I've done on how to use that. So yes, definitely give that a try. You might find that very helpful. Hidden divergence and how if it merges with the Bollinger Bands. So I'm not, Concy, if you want to rewrite that question, I'll try to answer that, but I'm not exactly sure what you are asking there. But again, if I get a Bollinger Band piercing, for instance, let's go back here and let's look at some divergences, right? So here is, I think, Kasi, this is what you're asking about. Here we get that sell signal, right? And that sell signal comes as we're getting our Bollinger Band piercing. We're on the outer edge. So that would be a good sell signal that we're going to revert back to the mean. Now, what happens is that, mean sometimes acts as a level of support, but in this case, we did get very close to the lower band, Again, notice what our bands are doing here. They're contracting, and price tends to bounce between outer and bands in a sideways to contracting band market. But then what did we do? We went and tested the outer band again, and we made a new higher high. But what did the MACD do, right? Our MACD went lower, right? Showing us negative momentum. This is called a negative divergence or a bearish divergence. That would be a great selling opportunity that the market is telling you not only are we going to revert back to the mean, but we're going to probably go from the outer band to the lower band. This is exactly what we did. Now let's go back in time, and I think I can find a negative divergence for you. And let's see if I can find one of those. Again, I think this would be a great example of that negative divergence, the opposite of what we just saw, excuse me, a positive divergence, positive or a bullish divergence, right? Here is that first Bollinger Band piercing, and then, right there we got our buy signal crossover. Notice that we did get a little bit of a spike in volume here as we were outside. Again, spikes in volume can represent tops and bottoms, but then what did price do? Well, it went down and tested or try to make a new low or relatively similar low. But what did our MACD do, right? Our MACD gave us another buy signal, and this MACD is rising, right, as price is falling, and that is called a positive divergence or a bullish signal. So you got the MACD crossover, and then you get the positive divergence as you're also getting that Bollinger Band piercing. So also, Brian, there you go, Brian. There's your final confirmation of your volume. Okay. So I see a lot of questions of folks here with some follow-up questions. Again, about some other indicators. Again, there are a lot of questions that if you have, please, I'm not going to get to all of them, but send them to support@barchart.com. They will answer your questions about other webinars or other indicators, and a lot of the indicators that some of you are asking about, we do have webinars on those as well. So let me do this. And I see a question here about candlestick patterns. Yeah, I have like 4 or 5 candlestick shows for us to look at. So let's do this. Oops, I believe this is my slide. Yep. Okay, so there's the My template, and then again, those are the preset settings. But again, the bar chart, EMAC volume 1, you can use that, and then just add Bollinger Bands to it. So what are the takeaways? Again, remember, Bollinger Bands help us predict this range of probability, right? Where can price go, and where is it unlikely where price is? And again, think of that ride in Disney. When we get to the outer bands, right, there's a higher probability that price is now going to snap back to our mean, regardless of what our trends. But also that think about how the mean acts as a level of support and resistance, and also as that catalyst. Using our MACD to confirm our momentum, right, that histogram buy signal or histogram sell signal, but also waiting for that MACD line to cross the 0 line to confirm our trend. And then that final piece of the puzzle is let's use volume to validate the price action that we are seeing. So as G mentions, there is a way that you can try a lot of the stuff that we have, a lot of the screeners, and we have 2 levels here that are the plus and premier level, and you can try these out for 30 days. I definitely would recommend that you do that. As far as what we have coming up, next week we have a very exciting session. I'm going to get an opportunity, and we're going to have a guest presenter, Dr. Alexander Elder, and he's going to tell us what his favorite indicator is. And what is interesting is his favorite indicator is based on data that he pulls off of Barchart. So I think those of you that would be interested, here's a well-respected, worldwide renowned, best-selling author who is going to show you his favorite indicator and the data that is created on our website that gives him that information or tells him where he believes that markets are bottoming and topping. So don't miss out on that one. I think that one's going to be a really exciting webinar. Gene, did I forget anything?
No, John, we're all good.
We're all good? Okay, great. So listen, folks, I hope you enjoyed today's session, get a little bit of insight into my crazy kind of mind, but I think what I'm trying to prove here is, or at least show you, is that you don't need to be too complicated, that you can use just some very simple and basic indicators that can create a trade plan. What we want to make sure is that we stay consistent and true to our trade plan and to those indicators as we work through our process. And so until next time, be safe, be healthy, and the best or the good of all trading.